Qantas Airways has posted its first full-year loss in 17 years. It reported losing $256 million over the past year. Australia's largest carrier says it's also cancelling orders for 35 Boeing 787 Dreamliners as it restructures. Qantas cites higher fuel costs, labour disputes and rising competition for the loss.
It is an iconic Australian brand, but Qantas, known as the Flying Kangaroo, has rarely had less bounce in its step. A $450 million loss, the first loss in 2 decades, is a sign of incredibly difficult times. Fuel costs are at record levels, a high Australian dollar is hurting, and an industrial relations dispute which Qantas management brought to a head last year by temporarily grounding the airline cost over $200 million. Domestic routes and its low-cost airline spin-off Jetstar are making money, but the Qantas International division is not. Qantas has cancelled an order for 35 787 Dreamliner jets. That'll hit their maker Boeing, but save Qantas over $8 billion in the short term. It doesn't, though, signal much commitment to long-haul routes, where other airlines with lower costs are biting into business.
Out of Perth, for instance, on the west coast, Qantas is only a marginal player that's dominated by Singapore Airlines and Emirates. Now, Emirates is now going to be, as of December, triple daily out of Perth. They want to bring their A380 into Perth because they're full. Whereas Qantas to Singapore, to London, is via Singapore. They've got 2 services a day. They're being swamped around Australia by these Middle East carriers.
One of Qantas's strongest growing divisions is its frequent flyer scheme, selling other companies the right to give their customers Qantas points. But even that relies on a strong brand and a comprehensive airline network.
We delivered an underlying profit before tax of $95 million, which represents a statutory loss after tax of $244 million. The results reflects 3 things. A record fuel bill up $645 million to $4.3 billion, 18% higher than the previous year. The cost incurred by the prolonged industrial action, which amounted to $194 million. And the transformation costs of $376 million. Approximately half of these are non-cash, as we continue to address our legacy cost base and turn around the Qantas International business. As previously disclosed, Qantas International made a loss of approximately $450 million based on underlying earnings before interest and tax. However, Qantas Domestic and Jetstar Domestic combined delivered a profit of more than $600 million by the same measure.
The domestic Qantas operation is doing well, controlling 65% of the market. It's the international arm where the problems lie, losing $450 million last year, in part because of greater competition from the Middle East and China, squeezing Qantas on its routes to America and to Europe.
Well, Qantas usually does outperform most other airlines in the world, but in this particular case, they've probably been outperformed by those other airlines. So this loss, which is, as far as I can tell, is their worst loss since 1953, is quite significant.
One way that Qantas is currently trying to deal with its problems is by splitting the company in 2. One side now looks after the domestic market and the other looks after the troubled international side. And there are a lot of reports in the aviation world at the moment about a possible tie-up between Qantas and Emirates as a way of helping Qantas through its current problems.
The next time Qantas publishes its results, there'll be 2 figures to watch out for, one for the domestic, one for the international. Shareholders and markets want the profits to multiply as well.